We do have a deal this morning. Rocket Companies announces it's acquiring home loan servicer Mr. Cooper. It's almost a $10 billion all-stock transaction. This comes just weeks after Rocket announced its plan to acquire the real estate brokerage company Redfin. Rocket Company CEO Varun Krishna joins us now to discuss what's going on here. Yeah, let's just start there. I mean, you are, as you say in your press release, I guess, creating offering an end-to-end homeownership experience. What does an end-to-end homeownership experience look like?
Well, thank you for having me. It's great to be here. You know, our vision is simple. We want to build an integrated home ownership platform that goes from search to origination to servicing. Our big realization is that these are all connected parts of the same ecosystem. And if we can integrate them, we can ultimately create more value for the consumer, and we can create a more frictionless and seamless experience around home ownership. And so that's really our strategy. And, you know, these deals are directly in service of that strategy.
Are you done, or are there more things that are going to help you create that vision you just spoke of?
You know, I would say right now, integration is our number one priority. It's my priority. It's our board's priority. And so we're going to be maniacally focused on making sure that Redfin, Mr. Cooper, and Rocket come smoothly together. So I would say that's our top priority. But we're also opportunistic. You know, I think there's a lot of interesting things happening in the technology world, in the AI world. And so we're keeping our eyes out for opportunities for things that are like tech tuck-ins that could accelerate our strategy. But integrating with these two amazing companies is our number one priority.
You're talking about fairly significant synergies. I think estimated annual pre-tax run rate synergies of $500 million. How do you get to that number, and why are you confident that that will be the case?
Yeah, actually, I think our synergy case is quite conservative. We have about $100 million in revenue synergies, and that's going to come from things like our recapture rates improving. That's going to come from the ability to actually have more title and closing business on the Rocket platform for Mr. Cooper. It's also going to come from just being the largest holder of escrow and warehouse lines and optimizing between those. So that's about $100 million. And then we have about $400 million of expense synergies. And that's going to come from things like technology stack consolidation. It's going to come from redundancy when you have like duplicate corporate public company operating functions. But I would say that the reason we think that this is conservative is because it doesn't take into consideration things like market rate changes. It doesn't take into consideration applying kind of the higher recapture rate that Rocket has to the Mr. Cooper servicing book. So we feel really good about the synergies, and again, we think that that's more of a baseline use case for us.
You feel like your investors or your shareholder base agrees? I mean, we're looking at a stock that's down almost 8%. Now, some of that, to be fair, may be some selling pressure as ARB set it up. It's an all-stock transaction. But nonetheless, you know, you are kind of transforming the company here. Do you think you have your shareholders with you?
We do, absolutely. Look, you know, the market is a little choppy today, but, you know, to be honest with you, don't look at the stock on a day-to-day basis. You know, we believe we're creating a generational company that's going to have long-term value, and we think that's an exciting story for our shareholders. So we're going to keep executing. We believe in our strategy, and we think our shareholders are right there with us.
Varun, it's Courtney. Thank you for joining us here today. Obviously, a lot of discussion about the deal, which makes sense today, but I'd love to get your take just generally on the housing market. You talk about a choppy market today, that's true, but also a very choppy macroeconomic environment as well. What are your expectations for where home ownership and home buying will be as we watch the current administration's policy and the monetary policy of the Fed play out?
Yeah, you know, look, again, we think homeownership is more important than ever, and that's part of the reason that we are so focused on building a better experience for clients. We think they deserve it now more than ever. And look, it's a big housing market, right? We expect mortgage to be $1.9 trillion this year. That's up 15% year over year. And as we look at kind of the spring home buying season, you know, I can tell you what we see are some green shoots that get us excited. You're seeing more inventory. You're seeing more homes sell at or below list. You're not seeing some of the same competitive bidding dynamics as well. But again, if I translate that back to our strategy, you know, we think that if we can create an integrated homeownership platform, we can remove friction and we can take cost out of the system and actually increase affordability for the person who matters most, and that's the client.
Yeah, you talk in your presentation about accelerating the origination servicing recapture flywheel. What does that actually mean?
Right. And so this is something we're very excited about. And it's really the big realization that the servicing business and the origination business are interconnected. You know, in servicing, if you do a great job and you love, protect, and amaze your clients, you earn the right to be their lender for life. And so you can offer them new products, new services that will allow them to partake in other value creation within the ecosystem. And so they may originate a new purchase loan, they may originate a new a closed-end second or a rate and term refinance, and that's what we refer to as recapture. And so the great thing about recapture is it is a low to no CAC acquisition channel for us, and we have deep relationships with clients because we interact with them on a monthly basis through those servicing signals, helping them with things like property taxes, insurance, et cetera. And so Rocket's recapture rate is 83%. It's 3 times higher, and we're excited to be able to expand that recapture rate into the Mr. Cooper servicing book, and that's one of the reasons we're so excited about this deal.
Well, Varun, we appreciate you taking a little time to help explain your rationale for it. Thank you.
Yeah, my pleasure. Thank you.